question we're thinking about after yesterday's Fed hike and strong sell-off is whether it's the Fed policy or is it a matter of trust in the way that Powell is communicating to markets. It could be. There's just no convincing markets anything but a forecast of no rate hikes and the Fed forecasting a recession and an immediate halt to reducing the balance sheet is the right policy. But you wonder if the Fed is simply failing to convince markets that first, the outlook is brighter than the market seems to believe, and second, 2 rate hikes are a data-dependent forecast, not a promise.
I think from this point forward, we're going to be letting the data speak to us and inform the outlook and inform our understanding of what would be appropriate policy. So there's a fairly high degree of uncertainty about both the path and the ultimate destination of any further increases.
Fed Chairman Jerome Powell took pains yesterday to describe this chart, essentially. He didn't describe a chart, but here's what it was. 2016, the Fed forecast 4 rate hikes. It did 1 because the economy ended up weaker. 2017, economy basically came in on target. Forecast 3, did 3. Last year, or this year, it ended up being a little bit stronger than expected, so they did 1 more hike. Now they're forecasting 2, and he's saying, well, we may or may not do it. Here's another problem. The Powell Fed seems to have a problem setting expectations for the market, which clearly went into the meeting expecting a more dovish outcome than they got. Here's a little bit of what we were hearing on the street about what the market wanted versus what they got. They wanted 1 hike or none forecast for 2019. Instead, they got 2. There was no chance the Fed was going to forecast 1 or 0 next year. That was never going to happen. The flexibility in the balance sheet. The Fed has been steadfast that there is no flexibility in the balance sheet. It may be wrong about that, but the market shouldn't have expected it. More concerned about the economy. Instead, it got a line that it was, quote, monitoring developments here. And some in the market had forecast the Fed would remove language calling for further gradual rate hikes. Instead, it was modified to say some further gradual rate hikes. I think the inescapable and worrisome conclusion here is that the Powell Fed has lost the trust of the market, and it could be guys that never really had it.
Well, it took a lot for you to say that. I know that we tried to censor you, I think, too, Steve. Did that go out? It stopped in my ear. It did go out. Okay, good.
I heard it.
All right, yeah, Steve, that was something yesterday. We didn't want to play any more Powell sound. Every time we played it, it seems like it goes down. I think you're right about that, Steve. And I'm hearing from a lot of people that it just seems like he hasn't learned how to assuage the markets or the participants at this point. And whether that's his job or not, I don't know.
But it's really important, Joe. I'll tell you the important thing here is that the Fed uses the markets to affect its policy. Effect, I guess, is the right way I'm saying that. And without the market, it can't really do its job. And he needs the market on board.
Steve, does someone like Jay Powell on a morning like this or an evening last night say to himself privately, this didn't work the way I wanted it to work? Or do you think they're in a position of, I don't really care about what the markets think and,
I'm of 2 minds of this because Powell should have been and should still be the most market-attuned Fed chairman we've had among the 3 whom I've covered. He was in the market. He's got Clarida there who worked at PIMCO. So what do you do when you know the market? Do you follow the market's every bit of turn up and down? Or is a market-savvy guy a guy who says, you know what? The market does a lot of stuff, and it doesn't necessarily mean anything. So,
hey, Steve, let me ask you a quick
question. You can
question.
have that attitude towards the market, like, hey, it's going to sell off. You were at an all-time high October 3rd. Today, what am I going to do? Go in the bunker and get ready for the apocalypse?
Steve, you're an objective guy. You watch Powell all the time. How would you rate yesterday's performance interpreting the printed release versus what he did? And I'm talking about the 2% decline in practically every index within 60 seconds. When he got into this, I'm going to give you 2, not 3, versus I was supposed to be data dependent. You know I love data dependent. I don't like guaranteed rate hikes. What do you give him? 1 out of 5 on the press release.
Kevin, I'm sort of interested in your thinking of hearing it as a promise. I don't hear it that way, but the market does, and the market is never wrong in the way it hears the Fed because it hears the Fed the way it does, and it's the one that reacts. So I'm giving him, if 1 is the lowest number, I'm giving him a 1 because he's not communicating, he's not getting to guys like you this data dependency thing.
When I see you later today, I'm going to show you my phone in that 60 seconds on the text from people that I work with on desks all around the world. They freaked out on that.
But Kevin, I told you exactly yesterday and the day before that what the Fed was going to do.
You didn't tell
Now,
me this.
I told
read
you.
the release like everybody else. I said, this isn't so bad. Then I listened to him. Now it got worse.
Interesting. But I told you they were going to go from 3 to 2. They were never going to go to 1. You know, and the idea, I told you the rate, the GDP was going to come down, all that, but somehow it's not getting into the market. I'll tell you this. I think Powell has spent a little more time trying to communicate with the American public than communicating with the markets, and I think you need to do the markets first.